Hello everyone, and welcome to our next technical analysis review for the Euro US dollar pair. Today is October 31st, 2012, and we are currently looking at price action on the 10-minute chart. And as you can see, I have this yellow vertical line in dividing yesterday's trading session from today's trading session. And for the past few days, we've been trading on very thin volume and liquidity, and due to the storm Sandy, we had Hurricane Sandy that hit the East Coast, and also the closing of Wall Street for the past 2 days. So then, of course, we was trading on very thin volume, but even in the midst of the thin volume, and although the U.S. stock market was closed, we can still see that on yesterday, the euro still managed to gain and strengthen in comparison to the greenback, primarily on good third quarter earnings coming out of Europe. So then we saw this rally in the pair on yesterday, and even though during the latter half of the trading session on yesterday we saw this pullback in the pair, but we can see that the pair began to maintain some of its gains from earlier in that trading session. So then you can see that trading into the to today's trading session, excuse me, we can see that for today the light volume continued, the thin trading continued, and this can especially be seen during the Asian trading session as it traded within a tight range during most of the Asian trading session. And it wasn't until prior to the European session or during the European Open that we began to see a kick up in momentum. We began to see price movement in the pair. But overall, the overall price behavior for today was pretty choppy. We saw this choppy pattern and this range bound behavior as the market shifted from being risk on to risk off during the trading session. So then, of course, if we look back at the European session, you can see this dollar weakness kick into the market as a result of just rising equities. We had rising European equities as we began to see some good European third quarter earnings for some of the companies come out. But we have rising equities. This also caused Spanish and Italian bond yields to fall. And then we also had a strong German retail sales number that came out. So then this added risk appetite to the market, and we saw the pair rally from the session low here at 29.47 up to the session high here at 30.21, where it found resistance, and it created this 74 pip trading range for the day. But as we began to move from the European session into the U.S. Trading session, we began to see the sentiment shifted and change. You can see that it began to exhibit some toppy pattern or toppy price action up here, and that's a result of a change in sentiment going into the U.S. Trading session. And you can see that as we began to move into the U.S. Open, we saw that the dollar began to pair some of its losses from earlier and retrace some of its losses from earlier. And some of this move could have been due to a number of different things. For one, we had lower Chicago PMI numbers that came out under 50, which is a sign of economic contraction. So this could have added to the dollar strength or the flight to safety or the risk aversion. But we also had end of the month rebalancing and repatriation flows into the US dollar. So then this also contributed to this fall lower. So then as you can see for today's trading, we sort of ended flat for today, primarily where we opened pretty much for today's trading session. So then there was no net gain or net loss in the market, and as you can see, prices right now consolidating, awaiting the breakout during the Asian trading session or the next trading session. So then since there was limited volume and then trading for today, there wasn't too many opportunities to trade on significant pullbacks in price. But if you were up at this time, you could have actually waited for price to pull back and find support at our 20 SMA. This pink line is our 20 simple moving average line, and once price found support, you could have waited for bullish confirmation. You could have entered your trade at about 30.03 or 30.04. You could have placed your buy order there. You could have set your stop loss below support at 29.92, and you could have took profit when price reached resistance at 30.20 for about a 16 pip scalp, just for a quick scalp for today, because whenever there's thin volume, you don't want to extend your profit taking out too long. You want to cut your profit short during times of just light volume and then trading. But that just would have been a quick scalp of 16 pips up to the next approaching resistance level, which was at 30 20. Now, there were opportunities to enter short on this move lower, but it would have been risky because there wasn't too many significant pullbacks up to an area of resistance to enter short, but you could have entered short and also on this move lower. But as I said earlier, we're sort of flat for today. We're sort of in this consolidation and waiting to break out. Now, if price were to break down to the downside and break below this support here at 29.43, then what we can expect price to fall towards this line here at 29.33, which is also our 61.8% Fibonacci retracement level. And this level was actually formed from our major drop on our daily chart. Let me go to the daily chart right here. From our year high here, at 34.87 back in February, down to our year low here at 20.42 back in July. And this is what formed the 61.8% Fibonacci retracement level, where we can expect price to find support if it breaks below our 29.43 support level. So then if price tests this 29.33 level and breaks below this level, then we can expect some stops to be triggered and momentum to push price all the way towards this ascending trend line support at 28.94. This is an ascending trend line support. If I was to go to the 3-hour chart, you can see that the support, or this ascending trend line, was formed from 3 consecutive lows from both September, towards the end of September, and 2 in October. So this is what formed our ascending trend line support, which we could expect to be the next support level if price was to break below our 61.8% Fibonacci retracement level. Now, if price breaks to the upside, let's say price breaks to the upside and it finds resistance at the 29.80 zone, or the 29.80 level. If price pushes above this resistance and breaks this resistance, then we can expect more bullish momentum to the upside and for price to retest today's high at 30.21. Now, if price breaks above this high, where we know there's also more stops, then we can expect, also further momentum and for price to test our next resistance at the 30.40 area. So then that's what we can expect for price action during our next trading session. We may continue to see light volume. We have a few numbers that come out on tomorrow, our ADP employment numbers, and of course we're heading into our non-farms on Friday. So then of course we may see a pickup in volatility for the next few days and a pickup in volume. So then that's it for my technical analysis review for today, and I will be talking to you guys later. You guys have a wonderful day. Okay, then bye.